What's up, guys? So today we got some selling in the market, and it could be the early warning signs of the pullback that I've been cautioning about. Before I get into these charts too much, if you wouldn't mind hitting that like button, leave a comment below, and as well as this Discord that I run, if you're not in it right now, it's completely free. I post in here throughout the day my thoughts, entries, exits, and have this growth account challenge as well if you want to follow that. Links in the description below. If you want to join, it's completely free for right now. It won't always be free. Take advantage of it while you can. But let's get into the charts. So on ES, what I've been looking at is this weekly chart. It's pretty much been a straight shot up for a little while now. And we had this pullback here, and we had a couple of times where it just pierced it by pennies, basically. But for the most part, this has been a straight shot up. And we're definitely overdue for a weekly consolidation. Like I was saying lately, we're towards the area where we should look for a pullback. We've only pierced through this overbought condition 2 other times in history. And one of the times it took 3 weeks, the other time it took 9 weeks till we got a pullback, and they were both 5 to 10%. So I was saying we're in the realm for that to happen. We're starting to pull back now. We broke the low of last week, but it's just the early signs of it. And right now, the way I'm looking at it on the daily chart is, although we did break the last low or higher low on the daily, we're holding a 20. Volume's not very elevated. You can see we had much higher volume over here. Like even on SPY, if you go to SPY daily, the volume's average volume. So it's nothing that's really sending out a big flashing red warning sign saying, exit your long positions. But we are consolidating right now. So we can have a slight pullback. That's not the correction I'm looking for, or pull over sideways and just consolidate for a while and push up again. Right now, I'm not seeing anything that's too alarming. On SPY, you can see we gapped down, so we have this gap now to fill. Once we do correct, I'm ultimately targeting at least this gap down here. And from where price is, as far as the all-time high to that, that's about a 5% correction. So I do believe this is going to fill in the longer term. But if you look at this chart on SPY, we came down to the 20, wicked off of it, closed towards the highs. That's a reversal candle to get us a push up. I would love for this to come down here, set a lower high, fill this gap, and then try to short it. That'd be a really good scenario, because then you take the gap off the table and you have your entry for the short closer to risk. So you'd be, shorting against these highs up here. On ES as well, we came down to the 20 period moving average and also the buy zone and bounced off of that there. We are selling in after hours right now, but like I said, the volume's not very alarming. So I'm not thinking that this is it right now. It could easily morph into that. Tomorrow we have some volatile market events coming out. So we had the PMI data coming out at 9:45, and then we have a couple Fed members speaking throughout the day, and Powell comes out to talk at 12:10. So definitely going to have volatility tomorrow. And then if you're swinging overnight tomorrow, you have jobless claims on Thursday. This whole week's just littered with the potential to really create a lot of volatility. So right now, it's not really anything too alarming, but it could easily change. So still need to be aware of that being a potential. On the 4-hour chart, we basically just came down, lower high, bear flag right now. But we have these wicks out of this buying area. And what bulls would want to see is this push up right here to shape up into a higher low on the hourly and push up. I'd love to get this zone again and short that. But we'll see what happens. Like I was saying to members today, you can't short down here. I mean, you can do whatever you want. But I personally can't short down here. We were historically oversold. So I didn't really show this in the Discord, but you can see I drew a line across. You see it right there, here, down here. We slightly pierced it here, and you got a small push up. But you don't want to short when you're this extended, really, because you have a good chance of at least getting a temporary bounce and you're going to be in a red. So you need to get something to alleviate that oversold condition to start shorting again. I wasn't comfortable taking a short down here, especially in the buy zone. And I was also saying the 20 period moving average on a daily was right here, so you had a lot of confluence. Definitely don't want to short that. The most ideal scenario, like I said, is come up here and give us a lower high on like a 4 hour daily to short against. That would mitigate some of the risk. You can also see that we rejected off of this last daily higher low that we had initially. Like I said, what I would like to see is just a trend change. Come up here, push, give us our daily higher low, fill that gap on SPY, and then short against this zone right here. We'll have to see how this develops overnight, but that's kind of what I'm thinking. Obviously, with how this is moving right now, could have to audible, but chart on SPY on a daily, this looks just like it's trying to retest a 20 and could consolidate for a little bit before it pushes up again. I said the volume's not anything that's making me scared right now. So to go over to Nasdaq, obviously, like I've been saying, this is weaker than ES right now. You can see we've been closing below this 20 period moving average on the daily for many times now throughout this whole run. So right now we're closing again below it, and eventually this is going to lead to like a bigger correction here. And like I've been saying, the Nasdaq also has this bearish divergence on the weekly, so we have to be mindful of that. We had that inside bar bear break. Right now we're still above the 8 exponential on the weekly. Daily's below all the shorter term moving averages, and the 50s down here. And on QQQ, we also have a large gap. Those gaps, the one I pointed out on SPY, they're all after that Nvda earnings that came out, boosted up the market. So this is going to fill at some point for sure. On the daily on QQQ though, that's a long lower wick, bullish body, closed below the 20 though. So I'd still be looking for lower highs on this to short. Same thing with SPY. Get me closer to risk and make it a more attractive trade. Right now, what I'm kind of seeing is this could be a Wyckoff distribution at the top, and then further pull back down, fill this gap. I think we have some other gaps. Like here's one. I just don't have them on the charts anymore. Here's another one. I know it was littered with them before during this whole run up. So I just loaded all the gaps on QQQ real quick just to update this chart. And as you can see, there's tons of gaps on this thing. Like we have a gap above. So like I was saying, the most ideal thing would be for us to bounce, fill this gap, and then you can short against this structure up here, get us closer to risk. Then you have this gap here, one there, here, here, and here. Ever since I believe there's a small one here too. Ever since our rally in October. So got 6 gaps right there. And I know there's people that think it's foolish to chase gap fills. Most gaps fill, and there's plenty of them here. So say what you want, but I'd imagine most of these do fill over time. Like just for this larger one, that's a 5% move. That's nothing crazy. And I'm looking for a 10% correction that would fill, a good chunk of these gaps right there, 3 of them. So I would imagine though, when I'm saying 10% correction, that's what I'm looking for on SPY. We could probably get deeper on QQQ. I don't know about all the way down here to fill this one. That's 15%. You're getting close to a bear market. Nothing's out of the realm of possibility, but I think there's a very high probability this one fills. And these ones are likely as well, I would say. But this one right here for sure, it's only 5%. So if it doesn't fill it during any kind of consolidation now, I would look for that to fill in the future still. But like I was saying, the volume's not anything significant. We still have a lot of events coming out, Powell talking, Fed chair people talking all week. So who really knows what's going to happen at this point? I know I'm going to tone down my size and probably play with more time as far as my options. Just because I know that this can go all over the place at any moment. So now I'm going to go over a couple of stocks real quick. And as we all know, SMCI is still really extended on this monthly chart. Weekly is still on an inside bar, so we'd want to watch this for a break. And this is telling me this could be a bull flag. Look at this huge push up, and then pennant, I guess you can say. Like, that's our low, but I'm saying if this would break, you can look for another touch somewhere, and the volume's tapering off. So I really don't like trying to short this, even though I am bearish on this stock. I just can't bring myself to short it. The premiums are really high, so you're paying a lot of money to play, and you can see right here the volume's drying up. So you can see on the daily chart, this is starting to get a little choppy. I don't like this price action at all. We had our push up for the lower high again compared to that high over here. Pulled back, looking for our daily higher low. Found it. Tried to change the trend back to the bulls. Bears rejected from that zone. Confirmed that we're still in a daily downtrend, but then we wicked off this buy zone. Decent sized wick. And that's not a bad candle, actually. So this is getting harder and harder to read, to be honest. This is exactly why I said I don't really want to trade this. I think it's pointless. There's opportunity elsewhere where you're not going to get faked out. You want large range, a lot of volatility. That's how you're going to make money in trading. When you get involved in the chop, your account gets chopped up and you can end up over trading, and in the long run you lose. So it's good to know when to step away, and in my opinion, this is one of those stocks you want to step away from. Everyone's entitled to do whatever they want, but I am not touching this thing. Like I said, what I would like to see is this to continue to tighten up, form some kind of triangle, and you can play that break with a spike in volume. You'd want volume higher than what we're getting right now, and you can see this is really low volume. It's just constantly getting lower. So this is telling you we're tightening up. I wouldn't trade this. I traded it on this day on that bull break for the daily higher low, just because that was going to get some sort of follow through, and I scalped it. But now I'm done. Like, I'm not at all touching this thing until I get something that tells me that we're compressing price and we have a lot of stops close by, and I want to see a spike in volume on like a 15-minute chart or something that would signify that our daily volume is going to be higher than what we've been having lately, because this is really low volume. I'm not touching it. I just figured I'd touch base on this because I've been covering it a lot lately, and in my opinion, you want to let the dust settle here and kind of see what it wants to do. Like I said, there's no real red flags in the market. Like, there's caution signs that we should potentially look for that pullback that I've been talking about, but the volume's not there. We still have more work to do. And ideally, you'd want the lower high bounce on a daily to enter in any kind of shorts. You want a good entry. Sometimes they don't give it to us. Like you could see today, we gapped down, and it's a little frustrating because I am bearish in these next couple weeks to months, but you got to take what the market gives you, and it gave us a gap down into a near buy zone on oversold conditions, and you just got to play it, take the trade that's there, or if not, sit on your hands. Now I'm going to go over Nvda. You can see on Nvda we have now 2 red candles on the weekly, and we're starting to consolidate. Believe it or not, this is still healthy consolidation. Again, no uptick in volume. In fact, this is the lowest volume we've had in over a month. So nothing concerning, even with that break. Bulls bought the dip. We still closed below the 20, still below the 8. So this is still bearish. Some bulls are out there saying that this could be our new daily higher low, and looking at this as one swift pullback. But like I was saying, I was looking at this as the bulls tried to push up, set that low, and we traded around there for a few days. So in my eyes, this is chop because we did break to a new low, no follow through. We could come up, set a lower high compared to this high, like short against the zone, I guess, and then maybe push down. I'm not sure how I'm going to trade tomorrow yet, but again, this is not concerning. The volume's not there. there is some things developing here. Obviously, like I said, we're below the 20 period moving average. We're below the 8 exponential. But at the same time, the bears aren't really pushing this down. So we could just be consolidating on this weekly chart on low volume, retest this 8, and try to push again into this next earnings. That could definitely happen. It's a month and 2 weeks away. Can't discount that right now. Until the bears come out swinging with high volume, we can trade bearish with the trend, but ultimately it's nothing that's signifying a larger pullback. That's the 10% correction I've been talking about. We need to have high volume for that to happen. And right now it's just not there. One thing to note on Nvda is this daily candle did close above where I was saying support was and it had to hold. So they gapped it down, tried to flush it down, and closed above that support. So this is still, believe it or not, bullish. Like I said, the volume's not showing that the bears are here. But for bulls to gain some momentum here, we need to do an inverse head and shoulders setup pretty much. So come up here, we pushed up. We created enough space that we could get an hourly higher low. So pull back, trend change, maybe short this zone again. We'll see how everything develops overnight with the futures trading. Not any real red flags right now. It's just healthy consolidation on the weekly chart, healthy consolidation on this daily chart. You see volume. On a pullback like this, right? Here's our high. The volume's slowly getting lower, and that's exactly what you want to see on a pullback if you're a bull. If you're a bear, you want to see increasing volume, showing that more and more sellers are committing to the move. Buyers are liquidating their positions. Just to briefly go over AMD, I was saying how if this low broke, that would be our weekly bear flag, most likely confirming. We're still below the 8 exponential. This looks really weak. This is not the one, in my opinion. If you're trading the semis, you don't want to pick this one to play bullish. The daily candle, though, gap down, bears try to push it down, long lower wick. So this could be trying to form that base in that channel, like I said, and maybe they try to push up again. But ultimately, on the weekly chart, the odds favor that we come up and set a weekly lower high compared to this high up here, and we could see continuation to the downside. Right now, this is definitely a bear flag. This would probably be the one you'd want to short in the semi space, in my opinion, and I might look to do so if we do get a push up. Now I'm going to go over Tesla. You can see that this bear flag is currently confirming. Pushed down, came up, we had wicks right there, and we broke the low of that weekly candle, and we're trying to get some follow through. Deliveries came out today, and they were really bad, so that could be a drag on this stock for a little while. We have earnings here in 3 weeks, so if we sell off into earnings, there could be a potential bounce play out of that, where they're anticipating the bad news already, and shorts begin to cover, bulls buy the dip. On the daily chart, you can see we had some high volume, but that was on the gap down. We're definitely in the zone, though, that I liked Tesla for a buy. So I was saying for a little while now, anything below this green line, that's a good time to start accumulating for myself and my plan. We have this gap still down here, and this is our last pivot. Bigger pivot, I would say, 152.37. So this zone right here, I'd be willing to accumulate. If we break below 152.37, we'd start to fill this gap, and I would stop accumulating anything until I get some sort of sign or signal that we're reversing. Volume climax, big reversal candle, trend change, at least on the hourly chart to try to play that. Right now, I'm not planning on adding to Tesla. I already have it in a small count challenge, and there's too much market moving activities this week that I'm not really initiating any kind of swing positions. I'm trying to remain liquid with cash available to take advantage of any opportunity that would come about. So if this does develop into that 10% correction, not saying it is right now, but if it does, then I have cash on the side to really take advantage of that. And that's kind of what I want. I want to make money on the way down through my day trading. And once I feel like we're closer to the bottom and we're starting to signal that the pullback is over, I want to deploy my capital. And that's only if we get the 5 to 10% correction. If we just get what we have right now, I'm going to stay cash. I'll just keep day trading. I want to be in capital preservation mode and not let the market take away my gains this year by some surprise move to the downside. As you saw in the markets today, we gapped down. So if you're swinging bullish, you could end up giving a lot of that back. And I'm not trying to expose myself to any overnight risk in this kind of market environment, given that, like I was saying, we're in the realm time-wise for a pullback these next couple of weeks, next couple of months. 5 to 10% correction is what I'm looking at. So I'm not exposing myself to that. But to get back to Tesla, now that I'm off my soapbox, we have this gap right here on this gap down into the delivery report numbers that likely will fill over time. I'm seeing people saying it's going to $50. Maybe. Who knows, really? But I remember people saying the same thing when it was down here at $100. I played this bounce, and we ripped almost a 300. They were saying, no, this is too expensive still. It's going down to $50. It didn't. No one wants to buy when things are doom and gloom, and everyone wants to buy when things are at all-time highs. So my advice to you, I'm not saying about this stock, I'm saying in general, is try to identify what you think is good long-term value and accumulate that. If you have a stock that you like long-term and you think it's way undervalued, don't listen to what other people are saying about running for the hills. That's when you want to be buying. We're not oversold right now, so I'm not playing this for any kind of chart pattern. Like I said, here I would want to accumulate, but I already have it in a small count challenge. And because I am waiting for a pullback in the market, I don't want to expose myself to this, because in the event that we do pull back in the markets and start to get that correction, this could come back, fill this gap, and I'll get cheaper price. Once I feel like the bottom is coming in on the market pullback, whenever that occurs, that's when I'm going to deploy capital. That's when I'm going to go into Tesla pretty heavy. As far as myself, this stock, I am extremely bullish long term. I think it's way undervalued for their potential outside of a car company for robotics, driverless cars, the taxi model that they have for their business. So if they capitalize on any of that, this stock's going to rip like crazy. I think this is a really good opportunity long term, but I don't want to eat unnecessary red. So I'm willing to wait until the market does give me the pullback that I think is going to happen. If it doesn't, then it doesn't. There's always another trade, and that's the way I like to look at the market. And if I can give any kind of piece of advice, that's a great mindset to have, because it doesn't make you FOMO into trades. You'll cut your losses, and you'll realize there's always an opportunity around the corner, and there always is. There's plenty of them throughout the whole year, so don't sweat one trade. It's not going to make or break your trading career. As far as the shorter term time frames, though, you can see we had our drop down, high volume, obviously, bear news, came into that buy zone. I was saying today that I wanted to see it go in between here, 163.62 and 160.5 for a bounce. But at the same time, I didn't really want to play this for a bounce because it was bad news. So I was playing ES or SPY. So you can see that we came right down into it, pushed out of it initially, and then the bears tried to take control again, and the bulls pushed away from that zone. So this is definitely a good area for a buy. But same time, we have our push down, and this is sort of like a pennant that could result in another breakdown. Everything's ultimately going to trade with the market. The only thing I did notice as far as stocks that I'm keeping an eye on is the marijuana sector did not really care what was going on in the market today. So you can see CGC came down and it now has a new daily higher low. So while the market was selling off, and I'll show you Msos in a second, the cannabis space did not care at all. You can see we did have an upper wick, though, of profit ticking into the end of the day. to where we closed. So we could, chop around here. Like maybe we push up again, set a daily lower high compared to this high, and we can chop around for a little bit. But like I was saying, if you look at Msos, this could definitely be the longer term bottom because you can see that we have a lot of high volume here compared to over here. Now it's still relative to price because up here we're at $50 a share and change, and down here we're at like $10. So relative, it's not really the same dollar volume, but it's still massive volume coming into here. We're trading above the 20 period moving average. We're trading above the 8 exponential on the monthly. That's bullish. Weekly chart, we're above all the moving averages to the 50, the 20, and the 8 exponential. What I would love to see on this weekly chart is tighten this thing up. Tighten it up into an election or whatever news and start to pop it on volume, and I'm going to play that. But like I said, this sector does not care what the market's doing. For now, it's negating it. On Msos, we opened higher than yesterday's close and sold off today, but compared to what the market's doing, this is nothing. Bulls are happy with this. Ultimately, we're just looking for a daily higher low compared to this low down here. So we pushed up. We have this high over here, our 52-week high. Any pullback you should anticipate, unless we have high volume coming in, that we form another daily higher low and maybe push up and break this. I am definitely keeping an eye on this, and if this starts to really break out, ideally above here, I might add it to the small account challenge and probably play it on my account as well. Msos, that is, not CGC. This is one, like I've been saying, I think we should keep an eye out, just given the year, election year, politicians running on it, etc. But that's pretty much it as far as today and what I have on the markets as a whole. If you could do me a solid and hit that like button, leave a comment below. It takes me a lot of time to do these videos, and I would greatly appreciate it. Ultimately, I'm trying to help people learn, and by hitting that like button, leaving a comment, it allows me to reach more people. Also, if you're not in the Discord, I said it's completely free for right now. It's not always going to be free. I'm not sure when I'm going to charge money for it. But even when I do charge money for it, my goal is for it to be significantly cheaper than anything I've ever paid for as far as courses, chat rooms, and all that stuff. The link's in the description below. Take advantage of this. Ask me any kind of questions throughout the day. I'm here to help you out. So I post all my trades, my entries, exits. You'll see in real time kind of how I trade and my thought process. I scalp a lot, but I do swing trade when I feel like it's conducive to do so. Today was just a scalp for a bounce trade, so I'm not swinging that. Not when I'm starting to get some kind of caution signs to tell me I likely don't want to swing, but we're not full out bearish just yet. So I said links in the description below. Check it out. See how I trade. You can see if I'm bullshitting you or not. So. But that's all I have for today. So until next time, I wish you all the best in the markets.